Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me is Vinny Motiwala. And this is the show where we take you through all the stocks that are buzzing away in trade, either on the back of research or on technicals. But first, let's quickly take a market check. Vinny, Nifty are trying to hold on to those 22,500 levels.
Absolutely.
And a sharp recovery coming on Nifty, and both bank Nifties from the day's lowest point.
The sharp spike up has come now also. Let's see this chart right now, right? Yeah. That's one spike that came in, and that is why it's crossed the 23,500 that level and 600 now.
Levels actually, yeah.
So yes, 23,600 where the Nifty's managed to climb up to right now. Day's highest point, 0.4% of uptick that we are seeing for the Nifty. Sensex, let's look at that as well and where that is moving. Sensex 2 is moving in tandem with the Nifty. So yes, benchmark indices holding on to gains of 0.4%. That spike up that we are seeing there. Nifty Bank today also is outperforming the Nifty. When you look at it, Nifty Bank is up 0.8%. And right now, when you look at it in terms of what is pulling up the markets, ICICI Bank, HDFC Bank, we have Kotak Bank, all these private banks which are still supporting. Yesterday also we'd seen these banks, outperform. Yeah. Obviously, Nifty Bank was at those record levels, and that is what today also seems like is supporting the market, is the private banking side managing to hold on to good gains. And other than that, Reliance, the big boy Reliance and heavyweight Reliance, clearly contributing a lot of points to the Nifty's up move that right now we are seeing. And Reliance up almost 0.5% in trade. So yes, that's how we're seeing a setup coming in terms of the markets. Broader markets also managing to perform slightly better than the benchmark indices. So whether the Nifty mid or small cap, managing to hold on to gains of 0.7 to 0.8% in trade. Keeping an eye on that, Ankita, not a bad recovery that we saw coming in at least right now for the benchmark indices.
Absolutely, Vinny. So Nifty at 22,600 above that right as of now. But we'll move on and we'll start with the stocks that are in focus today. And for that, we are joined by our research team. On our research team, we have Jane and Gaurav joining us, and we will be shortly joined by a technical analyst as well. But tell you what, let's get started with all the stocks that are in focus today. And first up is Sapphire Foods. This stock was trading with gains of over 6% in the early trade today before it eased off those gains. But it is on the back of the fact that the board of Sapphire Foods has approved the alteration in the share capital by division on a stock split of existing equity shares of one equity share having a face value of 10 rupees each into 5 equity shares having a face value of 2 rupees each. Now, the proposal is subjected to approval, of course, from shareholders at the forthcoming 15th general meeting of the company. And the board has also approved an alteration of the capital clause 5 of the memorandum of association of the company on account of subdivision of the equity shares, subject to, of course, approval from the shareholders at the AGM. Now, the date for the AGM has not been announced yet, but they will come out with a date very soon. But currently, Sapphire Foods trading with gains of 1.6%.
Okay, that is Sapphire Foods, keeping an eye out on that QSR space. Ankita, you start the day and start the show with food. Then it keeps remind me of ordering some food. But yes, let's talk about the next stock, because banks is what I'm going to highlight. And we have a note that came in from Macquarie. Now, obviously, we've seen the banks moving, but Macquarie has also upgraded the banking space. What they believe is that private banks, they believe, is something that sector is in the power of compounding. Steady power of compounding is something that is a story that will work out for private banks. They expect the return on equities for this in the range of 16 to 18%, which is also because of the attractive valuations that are there for overall banks, and insurance also is what they're talking about. Now, PSU banks is something they are not too excited about. They believe PSU banks will be falling in terms of the return on equities and driven by the normalization that one would see in the credit cost. So yes, what have they upgraded in banks? They have upgraded Kotak Mahindra Bank to an outperform, hike the target price to 2,025 rupees. City Union Bank also outperform rating, and that's also an upgrade that's coming from neutral to outperform, hike the target price to 180 rupees per share. We have SBI Life on the insurance side, where they've upgraded SBI Life to an outperform, hike the target price to 1,750 rupees. While for SBI, they've downgraded the stock similar, because what they said is in terms of the PSU banks is something that they are not finding too much of an excitement, and that's why the downgrade for SBI to underperform from neutral and hike the target price to 665, but just the rating has been downgraded. So yes, all these stocks buzzing away in trade. Kotak, City Union Bank, Bandhan Bank, SBI Life and SBI on the back of the brokerage note from Macquarie.
Absolutely. Moving on to other stock that is also in focus today on the back of a brokerage note. Gaurav, you picked out a CE Infosystems for us on the back of a brokerage note. Tell us, what is the brokerage note saying?
CE Info System is in focus because if you look at Goldman Sachs now, they have initiated with buy rating and a target price of 2,800 rupees per share. What they actually believe is that the company is actually helping in India's digital mobility journey. When we talk about mobility segment, they believe that emerging mobility business is actually bigger as an opportunity when we compare this with the core auto segment. Apart from that, there are certain segments from corporates and government market which actually represent meaningful growth opportunities for the company. And if we talk about core business as well, the core business is actually well exposed to premiumization as well as electrification, which will help the company. Now, if we talk about the impact of this note, we have already seen that the stock has gone up almost more than 19%. I mean, it has already hit the 20% upper circuit, and we also have management who actually gave some positive commentary. So definitely a stock worth watching out for the next few days.
Worth watching out for today, locked in upper circuit. So yes, what Gaurav was alluding to, that we spoke to the management. Let's listen into what they had to say in terms of the outlook and revenue growth margins of the company going forward. Take a look.
By FY27, FY28, we're looking to cross our milestone of about 1,000 crores in revenue. And if you see the past 3-4 years track record, we've been growing at a CAGR of about 38%. There's a lot of growth opportunities ahead for MapmyIndia if you look at the areas that we play in, which is maps, IoT, and drones. If you look at the track record, and we've always maintained that, at least in the past, that we're looking at a 40% plus EBITDA margin at the annual level and 30% plus PAT margin. And the focus really is between growth and margins.
Well, coming to you, Jinay, then you have picked out office space SOL for us. Tell us what is powering the stock.
Reported Q4 earnings for this FY 2024. Now, if you look at revenue, it stood at 232 crores versus 160 crores, which is an uptick of about 45% on year-on-year basis. And also, if we talk about net profit, it turned positive this quarter, with coming in at 1.4 crores versus a loss of about 14 crores last year in the same period. If we talk about operational performance, then EBITDA saw an uptick of about 34%, and the margin stood at 28.9% versus 30% on year-on-year basis. Now, the average occupancy level of the overall basis stood at 71%, the company reported. And growing ahead, the growth strategy would be growing the portfolio centers under asset-light model and the asset-light MA model, especially what the company says. And also, they will be increasing the focus on office transform, office care, and the other allied services. Also, higher cost efficiencies through higher vendor base is something which will support the stock going ahead.
All right, moving to the other stock that is in focus today is Radico Khaitan. Food and drinks is what I picked out for today.
That's your trend, though it's not Friday yet that you're binge eating, binge drinking. No.
but Radico Khaitan nonetheless is in focus today because Radico Khaitan's luxury brand has been awarded the Best World Whiskey and Best Gin at the John Barleycorns Award 2024. In fact, Rampur Jugalbandi has been voted number 3 as the best world whiskey, and Jaisalmer Gin Gold Edition wins the best gin in the world. Also, Rampur Luxury Collection has won multiple accolades on that forum. And remember, just 2 days back, the company had announced plans to bring its international brand of single malt whiskey, Rampur Asawa, to Indian market, which is priced at 10,000 rupees a bottle. On the back of accolades coming in for Radico Khaitan, the stock is in focus today, currently trading with gains of 4%.
Surely keeping an eye on that, but let's shift focus to talk about some of these agrochemical stocks. So let's pull up something like an Aarti Industries, Gujarat Fluoro, Sharda Cropchem. All of them is what we're keeping an eye out on. Now, Nuvama actually met with some of these companies, and they had certain key highlights that came in from this specialty chemical as well as agri-chemical meet, where they said most of the chemical players actually confirmed the revival in the overall business environment. Let's not forget that last year had been a tough year for all these chemical companies. FY24, excessive channel inventory, Chinese dumping, and inventory-led losses, which actually impacted the company. Now, today, look at both these stocks. We have started seeing that upmove come in all these chemical names. Today, also Gujarat Fluoro as well as Aarti Industries managing to hold on to strong gains. Other than that, what Nuvama is also highlighting, that domestic demand environment is favorable for agrochemicals and intermediate manufacturers, while a few players are seeing demand recovery even in the FMCG and discretionary side. So their preferred pick comes in as Aarti Industries, Gujarat Fluoro, Sharda Cropchem, and With the other companies, what they also believe is Insecticides India, that is also quite well placed. It's not under their coverage, but they think that is also a company that one could watch out for. As of now, surely you can see all these stocks buzzing away in trade.
All right, moving on. Gaurav, you picked out Uno Minda for us, another counter, in focus on the back of a brokerage note by Goldman Sachs. Tell us, what is the note saying?
Well, yes, as you rightly said, this is another company where Goldman Sachs has actually initiated with buy rating and a target price of 1350 rupees. What they believe is that the company is actually switching their lights from on the alloy wheel and EV segment in India. What they actually believe is that company's localization in high margin alloy wheel segment is going to support the profitability and the profit visibility from here on. Early product portfolio in the two-wheeler segment is already providing the company with kit value optionality from in the company's overall business, and there is more run to which is left in four-wheeler lighting segment and two-wheeler alloy segment. Apart from that, if you look at the valuations, company is trading at a high multiples, but this is on the back of the industry's volume growth and at a stable margin. And on the back of this news, they have actually been a little bullish on this stock with 1350 rupees as a target given. Looking at the stock, it is performing well. It is up almost 2%. So definitely worth keeping an eye out on in coming days.
Absolutely, keeping an eye on that. But let's bring on board Ashish Kyal as well on the technicals. Ashish, good afternoon. And I just a short while ago was talking about specialty chemicals, agrochemicals, all these chemical companies that have been in focus. And right now we're picking out GNFC for us. What's the thought on this, and what is the target that you're keeping for GNFC?
See, if you look at the entire space, that has been buzzing around, and we can clearly see that if you look at GNFC, Tata Chemicals and other stocks also, that has been showing a very good up move, and GNFC showed a very strong rise in today's session with huge volumes. It's giving a good breakout. So we can expect GNFC to reach towards the level of around 810 on the upside over short term, and on the downside, one can maintain a stop loss of 725 level.
An eye out on GNFC and the levels over there. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be continuing with the stock journey after the break as well. Welcome back, and you're watching Market Fatafat on ET now. Let's keep it going with all the stocks that are buzzing in trade. And Ashish, Jindal Steel, what is the view on this one? Today the metal pack is surely shining, and that's what has been the trend. You know, sometimes you see them really perked up in trade. Last 6 months, Jindal Steel has managed to see returns of almost 48%. What is the view now?
Jindal Steel over past few weeks has been moving in a range, and today, after looking at the price action, it looks like positive breakout is awaited here, and we can expect the stock to reach towards the level of 1150 on the upside. So the overall trend is bullish. The stock is showing a positive attempt and can give a very good breakout. On the downside, the support for the stock is 1040. So as long as 1040 is intact, we can expect it to reach towards 1150 level.
All right, that's JSW Steel. But moving on, Jinna, you've picked out Brigade Enterprise for us. This counter is buzzing in trade with gains of over 1%. Tell us, what is the news flow here?
Well, yes, so the company has signed a land agreement to develop the third World Trade Center tower in Info Park, Kochi. Now, the company says that the project will be completed in about 3 years with a development cost of about 150 crores. Now, this new tower will be 16 stories high, and it will come up at a non-SEZ plot with a built-up space area of about 2.6 lakh square feet. Now, the Mr. M.R. Shankar, who is the executive chairman of Brigade Enterprises, says that this company is keen towards expanding in Kerala much more and are exploring other viable land parcels as well. And if you look at the stock was actually gaining up about 4% gains in the morning, as it pulled off for a bit, and is gaining about 1.2% now.
Surely keeping an eye out on Brigade Enterprises, but NMDC, that's all shiny and bright in trade. We have Incred that has retained a ad rating, I beg your pardon, and a target price of 319 rupees per share for NMDC. What they are highlighting is that they see there is a positive that is coming in for Indian and overseas pellet exporters, and pollution concerns regarding China are dwindling. Overall, the global scrap exports as well as unabated Chinese steel exports inputs as the currency is depreciating, which bodes well for pellet premiums. Now, other than that, they believe that overall 67% of iron ore pellet premium is likely to remain at around $40 to $45 per ton. So, on the back of that, it's a positive for NMDC, 12-month target at 319, already seeing an uptick of 4% right now.
All right, that is NMDC for you right now, trading with gains of over 4%. But moving on, Indian Oil is the other counter that is in focus today, and it is on the back of the fact that Indian Oil and GPS Renewables Limited has formed a joint venture for sustainable energy solutions. Now, it is a 50-50 joint venture company which will be dedicated to advancing biofuel adoption across the country. And on the back of this joint venture, Indian Oil is in focus today, trading with gains of 1%.
Okay, let's move on to the next stock, and stock number 13 is what we're going to talk about is Bharat Forge. Ashish, what is your view on this one? This one is buzzing in trade today. Last 1 month also has managed to see good returns of 16-17%, and seems like this trend of slowly, steadily picking up pace in the last few months. Do you think it's here to stay?
Yes, if you look at Bharat Forge, it has been constantly forming higher lows. That is the precursor that the trend continues to be on the upside, touching that 52-week high. And so the overall tone remains bullish for Bharat Forge. One can continue to hold on if having long positions, or fresh longs can also be created at these levels, expecting a target of around 1900 on the upside from here on. And on the downside, one can maintain a stop loss of around 1660 levels.
Okay, surely keeping an eye out on that one. Let's move on and talk about Dr. Lal Path Labs. That one is in focus because we had a brokerage note that came in for Dr. Lal Path Labs from MK, where they actually met with the management. There were certain key highlights that came in by MK. They've retained their buy rating for Dr. Lal. Now they're saying that Dr. Lal Path Lab is increasingly witnessing the bundling phenomena as doctors are recommending multiple tests to a certain accurate prognosis. Other than that, they expect high single-digit growth in sample volumes and middle single-digit growth in terms of footfall growth for FY25 is what MK is expecting from Dr. Lal. With phase 1 of the integration process over, they believe Dr. Lal is expecting to widen of the suburban network in India, focusing on South Mumbai and deepening its reach in Pune and Goa as well. And strategy is to reduce dependency on Delhi NCR region, which the company has right now, by organic network expansion in the rest of North India. A focus on UP is something as a possibility. Tier 3, Tier 4 cities is something they could watch out for. Competitive intensity, that seems to have now settled down from online players. Pricing levers are remaining the last resort for boosting the revenues, and that is why they're maintaining their rating, and the stock is in focus today.
All right, Ashish, coming to you. Tata Chemicals is the name that you have picked out for us. Ashish, if you look at the chemical space, the chemical fertilizer space, that space wasn't moving for a while, and then suddenly now it is on the radar. The spotlight is on the chemical stocks. Tell us what you pencil in for Tata Chemicals on the charts.
Yes, if you look at the chemical space, we can clearly see a strong buzz around this area, and Tata Chemical is after a brief consolidation, it's showing a good breakout happening. It formed an inverted head and shoulder pattern also, and giving a good breakout in today's session. So looks like the momentum can start picking up again on this stock, and we can expect the target as per the pattern around 1300 levels on the upside, and on the downside the support is 1100. So the risk reward looks very appealing for creating fresh long positions in Tata Chemical at these levels.
Can create fresh long positions, looking quite attractive right now. That's the word on Tata Chemicals from Ashish. But Gaurav, DCB Bank, what is Motilal Oswal saying about this one?
Motilal Oswal has actually upgraded the rating for DCB Bank to buy, and they have also increased the target price to 175 rupees. Now what they believe is that business has it has a steady business, and if you look at valuations of the bank, they are also at a attractive level according to Motilal Oswal. They are seeing operating leverage to drive the ROE from here on, and if you look at the loan growth, we saw that the bank actually struggled in the loan growth in FY22 period, but after that now Motilal Oswal expects that the loan growth will remain somewhere around 19% CAGR over the next few years. Retail mix is also rising for the bank, which is actually positive because the bank is focusing on the branch expansion. When we talk about revenue growth, that is expected to lead to OPEX growth as well. But now Motilal Oswal believes that the cost to income ratio will remain somewhere below 60% only, and asset quality is also likely to remain healthy. Now talking about the stock price, it has also reacted positively. It is up almost by 4%, and given that the Motilal Oswal has given a target price of 175 rupees, we still have 23% of the upside left. So definitely one stock that I am looking out for is DCB Bank.
All right, DCB Bank is what is the stock that we're looking out for. But coming to you again, Ashish, I beg your pardon. Ashish, you have picked out AB Capital for us. In the last 6 months, it has given us some returns of over 50% returns. Tell us, what are you seeing on the charts? Do we see a bit of a consolidation coming in the last 1 month?
See, if you look at the charts over past few weeks, I can say that it has been consolidating, and now it is again giving a breakout on the upside, touching that 52-week high mark in today's trading session. So the overall tone for the stock is bullish. We can clearly see this is along with the pickup in the volumes also, and there is still a lot of room on the momentum indicator. So the overall trend for AB Capital looks to be bullish. We can expect a target of around 270 on the upside for the stock, and one can maintain a stop loss of around 230 levels on the downside.
That was stock number 17. Keep an eye out on AB Capital over there. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
If you like this video, then like, share and subscribe to ET Now.